Let's talk more now about Intel and bring in King Lip of Baker Avenue Wealth Management. He is an Intel shareholder. King, welcome. What do you make of that report as a shareholder?
Hi, Brian. Yeah, happy Friday. Yeah, we have a small Intel position. Our initial thought was the AI chips that the company would have would be look attractive relative in terms of an open platform relative to NVIDIA's chips. That being said, the company is stuck between a rock and a hard place. The company's running out of options. The costs are ballooning while revenue is falling. We think there's still a lot of value embedded in the company. So a breakup of the company honestly makes sense to us. Innovation has been lacking at the company. So if the company is smaller, it could sort of invigorate whatever's left of the company after a split up.
It really is a story. When you look at Intel, and those of us of a certain age remember when Intel was one of the biggest and arguably most important and most covered and most coveted companies in the world, a lot of good people at the company. It's really, they missed it. So somewhere along the line, they made some strategic mistakes that have just wiped out a lot of shareholders, or at least cost them a lot of money. King, why are you taking, I know it's a small position, why are you taking a shot on Intel?
Just because we do believe the parts of the company are actually worth more than the whole, if you would. For example, the foundry business actually makes sense to us from a geopolitical reason, not having all chips manufactured overseas. Now that's a little bit of an about face if the company spins off its foundry business. But I think part of the reason why it's run into some issues is it's really had a handful of customers. And I think the reason for that is, competitors are looking at Intel and say, do we really want a competitor manufacturing our chips? So a spin-off of the foundry business actually makes sense. Maybe the company will retain a stake if there's a restructuring, where it would actually allow it to be more competitive relative to its competitors. And I would agree with you. I've been long enough to know that at one time, Intel could have crushed AMD at any time, and now AMD's 2 times greater than Intel.
Here we have the current stock market update for Intel Corporation, stock ticker INTC. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders will be able to find this information more easily on the platform. So here we have the 2-hour price chart. We did have a prior commentary from an investor explaining why he is continuing to hold on to his position. And here we can see that the stock is attempting to now form a base just above the 22 level. So in this video, we're going to be looking at some very specific price zones and identifying some possibilities here that would sort of equate or lead to an upside turnaround for this stock going forward. There are many people that are in downside positions on this stock currently, and then additionally, there are many people that have been interested in this stock looking to buy the dip, playing the potential for a reversal to the top side. So here what we can see at the moment is the price low currently comes in at $18.84. As I explained in prior videos, it does look like the stock is attempting to form a base here, and it's starting to seem less likely that we will see drops deeper below here with a sustained move into the 20, below the $20 level. That still remains to be seen, obviously, but we have had several occasions here where the stock has had opportunities to move into that area, but we have continued to find support just ahead of that level. Near-term price lows come in right around the 1950 mark, and then from there, prices were able to base enough that we were able to form new near-term highs coming in at 22.12. So as things currently stand, we can take a look at the indicator reading here, and there are some interesting factors to note that we should take stock of here at the moment. So one thing that I would point to would be this current activity in the relative strength index, because what we have here is a fairly well-defined trend movement, trend momentum indicator that has now recently broken to the top side. So what we can see here is that this ultimate price high coming in at $37.16. This was the prior range breakout that sent the share price all the way to 37.16. If we go back to this time period and then look at the current trend move lower, we can see that the negative momentum that governed the stock during that period of time has now completed itself and run its course. And as we can see currently, this trend movement has now broken to the top side. So this is a very significant development for this stock. The RSI can work as a leading indicator for share prices. We can start to see trend movements higher in the RSI before we start to see them in share prices themselves. And what we really are seeing here is a fairly significant bullish divergence condition in the relative strength index that's starting to emerge on the shorter term timeframes. So what we can see here is, a fairly steep slope in the RSI in the shorter term on a shorter term time frame, whereas the difference between these prior price lows are much less significant. So in other words, we're looking at a prior price low of $18.84, a near term low of only $19.50 roughly. But as you can see here, this trend movement here in the RSI is much more steep in nature. We're seeing a much bigger difference here. So all this does start to point to a potential turnaround point for the stock near current levels. As we can see, the stock did reach heavily oversold territory, falling all the way to roughly 6.5 in the relative strength index. I mean, this is not a short-term time frame. So this is not the type of activity that you typically see. You don't normally see any stock move into that type of territory. So, there was a very significant price difference here. We actually saw prior rallies in the stock. We saw an upside break out of a long-term trading range. And then, a complete reversal here in share prices. So what this has created on the price chart itself is a bullish divergence condition, which really does suggest that a bottom is now in place. So for anybody that is looking to play this stock on a shorter term, from the shorter term perspective, this does look to be a fairly safe buy at the moment, as long as you're willing to possibly scale into the position, moving down to 1950 if we were to see that price level trade again in the near future. Overall, we can look at some potential places to form resistance to the top side. Currently, I would specifically be looking at 2580 as a potential zone for upcoming resistance, because here we do see an important 38.2% Fibonacci retracement, as well as the declining 200 period exponential moving average coming into contact with this area. So currently, share prices have managed to move into above the $22 mark, and I do think that the stock has some fairly low levels of resistance here. There's really not much here to act as resistance for share prices until we reach share price trend movements that come closer to the 2580 mark.
And I'm not going to bring the dirty world of politics into this, King, but I'm going to bring the dirty world of politics into this, because Intel's been a huge beneficiary of what they call the CHIPS Act, right? It's received billions, or will receive billions in taxpayer dollars to help build this out, an Ohio factory, et cetera. And I'm not bringing it up for political reasons. I'm bringing it up because you do wonder if there is a little bit of a taxpayer put, for lack of a better term, on Intel, meaning the government has sort of singled out Intel in a good way to receive money. And you wonder if there is a little bit, there's no way the federal government wants Intel to have any more problems. And as a stockholder, you kind of wonder, if the federal government has a company's back, so to speak, does that mean I should, have the company's back as well? I think you see what I'm getting at.
I do, and I think there are political reasons, there are financial reasons that Intel can come out of this. I think the timing is just really bad for them. I mean, the earnings report recently was dismal. But as I mentioned, there's a lot of reasons why the company can come out of this ahead. If you look at this year's earnings, it's awful. But looking into 2025, actually, the company's prospects look a lot better. But they really need a bridge to transition to 2025. And as you mentioned, there's federal tailwinds, and if the company can get over this tough spot here, I think the company will be fine.
Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.